What's going on, investors? Holy crap, did Broadcom just crash the market? And what did their earnings say that dropped their share price overnight $40+ a share? That is a huge amount of market cap that just evaporated overnight. What happened? Let's break it down. Let's try and figure out why their stock sold off so much and give you some actionable insight into next week. Now, I own some Broadcom stock, and I also have a bunch of option spreads open on Broadcom. I think it's a really great, strong, successful business that is playing the AI space really well and not like overhyped like some of the other hyperscalers. Let's pull up their chart really quick, and I want to show you guys what I've been looking at. So over a 5-year chart, I mean, they have been exponentially growing. And when I'm looking at investing in companies, and especially when I'm trying to trade options off of companies, I am definitely looking for this upward momentum trend. And I want it to be as predictable, obviously, as possible. I don't mind consolidation periods, especially if it's a company that moves with action. And it's definitely on an uptrend. It's definitely part of the AI story. So what's going on? I think a lot of this is just like Nvidia beating and raising and still selling off, and Netflix beating and raising and still selling off. And so I think that a lot of the market nervousness is just literally trying to read as many tea leaves as they can in these earnings reports. So what happened today or yesterday that caused this crazy sell-off overnight? So this was yesterday, and this is what I was looking at. I have options that are expiring next week. And I have an iron condor on Broadcom right now. So I was actually worried about the call side of this condor. I have it set for $410, and we were pushing $410 yesterday before earnings, before the close. And by the time I checked this last night, it was already up to $424. I went, oh shit, I am going to eat it on the call side of this iron condor, which I thought was the safe side, honestly, of the price direction. So by 5 o'clock, I was like freaking out that we have already pumped up from 407 at close to 424. So I dug into what the earnings call was, I listened to the whole report, and then at 5 o'clock when the call started, everything sold off. And it kept selling off, and it kept selling off. And then by the time we opened up this morning and all the suits acted on it, it sold off even more, basically all day. Now, in terms of fundamentals, it actually looks like it's pretty well on track. Like if you're looking at just earnings per share, we're on a really positive track, and they're continuing to guide upwards. They beat yesterday by a ton, right? They were expecting $1.12 per share. We ended up getting $1.74 per share. And outside of this last Q3, they've been on an upward trajectory for most of their earnings calls. In terms of their revenue, like this is a great balance sheet to look at. Annually, they're just growing their revenue every single year. So what is it that the suit saw that spooked everybody, that created this $40+ sell-off and depreciation in market cap? There were two things that were kind of hidden in their reports that I think are leading to this that you can pay attention to. Now, long-term, I'm still bullish on the company, and I do think this is an overreaction, just like Nvidia, just like Netflix, just like a lot of these other companies and hyperscalers. Oh, Meta, Meta sold off and is getting pummeled. They're finally starting to recover, but like they had great earnings and they got wrecked for it. So I think this is an overreaction, and I actually like pullbacks like this because this gives us a chance to get in a lot cheaper than we were a couple of days ago. So keep an eye on this, but the two big things that they said during their earnings call that I think we got to pay attention to. Number one, their AI business is actually growing. It's not hypothetical like some of these hyperscalers. They're actually increasing revenue every quarter. Last quarter, they guided for $17.4 billion, and they ended up beating that to $18 billion this quarter. That's good. That should be positive on the stock price. They beat by 3.4%. Their AI business alone went from 6.2 billion to 6.5 billion. So they're proving the model and they're proving that they can grow. That should be bullish for the overall AI story. But what I think has ended up happening is if you listen to their CFO talk, their gross margin on their legacy products were actually higher than what their new AI product margins are. So as their AI business increases and their legacy products decrease, their margins are actually compressing. So the CFO explained last night that guiding into 2026, those margins were compressing by about 1% quarterly. So I think that's number one. If we're looking at how do we maintain this to the moon growth story, if we're compressing margins, usually that's not a good thing. So I think that was the first main shot across the bow for Broadcom that people are paying attention to. So keep an eye on margins and subsequent earnings calls, because if that continues to compress and their earnings start to drop off, then my outlook for Broadcom becomes a little less bullish. The second thing that I thought was really interesting is they mentioned their tax rate increasing. Now, this is something I've listened to and heard from multiple different large companies this year. And my maybe novice brain was like, big, beautiful bill, tax cuts, deregulation. Like, we're supposed to be making more money and less taxes, especially for these big corporations. Why are we paying more in taxes? Netflix got hit with a giant bill. Meta got hit with a giant tax bill. And now Broadcom's talking about how their tax basis is going from 14% up to 16.5% in 2026. So that's a huge change. 2.5% on a tax basis. If you make $1 billion in revenue, you're paying $2.5 million in taxes more than you were last year. So where is that coming from? It's not actually coming from the United States. What it looks like is that most of these tax increases are coming from other places where they're doing business. Their business countries are shifting around into more highly taxed areas like Europe. So I think those are the two big things. They're so minor in compared to the major story of this, but I think that the market really right now is looking for anything they can find to pop the bubble. So it's definitely an interesting time to be invested and looking. I think this is a great deal right now. Not investing advice, but I can tell you personally, I'm looking at 359 as a great entry point into Broadcom. Obviously, I'd like to go review the rest of their 8K that they just dropped today. That'll have a lot more of their balance sheet on it and more information. Usually what happens is they're all happy-go-lucky, everything's great on their conference call for earnings, and then their 8K comes out, you look at their balance sheet, and sometimes it's not so pretty. So I'm gonna dig into that, but right now I think that the major two things that were affecting Broadcom today were their tax basis and their gross margins compressing. So until the next one, go make a lot of money. Peace.